Hey everyone, this is Alvaro Rice. I'm your host today at CEO Unscripted, and I am delighted to have with me Chris Goff, who, if you are not in an industry, you might not know, but if you are, you should know, who is the head of the real estate tech practice for GCA Advisors and has been actually at the center of almost every important transaction that has happened in our industry for the last couple of years. Out of memory, Trulia, well, market leader, Lone Wolf, recently Showing Time, Skyslope, and speaking to you right now, he was our advisor at CINC when we partnered with Fidelity National Title. So he's a longtime friend and a true insider into this industry. Chris, so much thanks for joining with us today.
It's great to be here, Alvaro, and great to reconnect. I have very fond memories of our commission zinc sale process, and very excited to be in this conversation today.
A lot of long nights preparing there.
That's right. That's right. Always. It's always intense at the end of any process.
Well, it never goes through before it's about to break down, right? But I'd say and I come, for people that don't know, from private equity, so I've been in both sides of this kind of things. And I would say that our partnership with Fidelity was probably one of the smoothest ones that I've ever seen. So thank you for that. I do appreciate it.
Of course. Yeah, it was great.
And the main reason that I know this is a little different than what we usually do, right? Because if you follow our series here, it's usually more targeted on things that affect the team leader, the agent, the producer within the real estate. And you could say, okay, so how does this affect me? Because this that we're doing today honestly is about what is happening with the world of real estate tech or real estate in general from an acquisitions point of view. And the reason that I wanted to bring this to you all today is because we're living abnormal times in many senses, but including M&A within our world. The amount of money that is being poured today into real estate tech, or I guess what the cool kids are calling PropTech, is unprecedented. And we're seeing acquisitions left and right, many very valuable with a lot of creation of true value, some that I go like, what? And so because of all of that, knowing Chris and having him at the center of all of that, I wanted to ask him to walk us through what is happening today. Because whether you are in real estate tech or whether you're a broker, or even if you're a real estate team, I think this is relevant, very relevant for all of us, and no one better to walk us through this current world than Chris here.
No,
so Chris.
Yeah, thanks, Alvaro. And I mean, you're absolutely right. This is one of the most exciting times in the PropTech industry that certainly we've ever seen here at GCA. We've been focused on the space now for the last half dozen or so years. As you alluded to, we started off with the market leader sale to Trulia, what seems like many moons ago, but really kept a lot of momentum driving off of that transaction. We sold Zip Realty to Realogy, the Commission Zinc business to Fidelity National Financial, the Dot Loop business, the Skyslope business, the Atom Data business. So the list goes on. And as we've seen these strategic investors and buyers come into the market, we've also seen a massive influx of private capital, as you know, so from some of your brethren in the private equity world, some of your old brethren in the private equity world.
I take no blame.
So,
I take no blame.
You know, it still feels like, although there's a tremendous amount of activity, more so than we've seen ever in this space, it still feels like we're in the early innings, really, in terms of technology adoption across the market broadly, in terms of the convergence of the mortgage, title, insurance ecosystem as it attaches into the residential real estate transaction. And then I know that Inman's audience tends to focus a lot on what's happening in the residential space, rightly so, but there's a whole set of parallel themes that are happening across multifamily, across construction technology, across commercial real estate technology. And so this category of PropTech has so many different silos of market activity and sort of sub-trends. And I would say all of them are still pretty nascent in terms of technology innovation and the ability to use technology to really improve the consumer experience in terms of their interaction with the broader ecosystem.
I remember, so again, 5-6 years ago, when I was still in private equity, the big issue in private equity in general was there's it's impossible to invest in real estate technology, right? There was no reliable, I don't want anyone to get offended with me, but there was no reliable, investable, when private equity did things in a very systematic way, and there were no poster childs of how you could have an in and an exit. And I think, and again, you've been at the center of this, in the last 5 or 6 years, there's been a breed of companies, out of a lot of them, so there's been a lot that failed, but there's been a breed of companies that have been able to provide a systematic approach to adding value to the industry, not trying to replace value, but trying to really create new value. And it's interesting to see how money has then flocked to that. Once that appeared, the investment is there, right?
Yeah, and I think one of the things that the private equity and growth equity community is starting to realize is that the industry is bigger than just an individual agent, a broker, and a real estate transaction itself. And so there are all these other monetization opportunities around the real estate transaction where, for the consumer's perspective, ownership of the home tends to be their largest asset, as you and I both know. Mm-hmm. And it tends to be the primary source of activity around which it's the central kind of hub and spoke model, where you have home services, you have home warranty, you have your insurance policy, you have your mortgage and refinancing activity potentially associated with that mortgage as rates go down. And so everything that a consumer thinks about as an extension of what they're doing around the home is now attached into this property technology ecosystem. In addition to that, you're seeing kind of big TAM opportunities. When I say TAM, I mean total addressable market opportunities, because the segment is so fragmented. And you see companies like Opendoor and others come into the space and be able to kind of institutionalize, as you said, a process that had traditionally been paper-based or a little bit clunky or hyper
flipping houses. Flipping houses was around before Opendoor, right? But there's someone that is coming and, as you're saying, institutionalizing it and making it more efficient and streamlining it, so that then people outside of the industry can say, oh, okay, this is a real thing and I need to be in.
Exactly. And so, what we've seen, I mean, sort of jumping into some commentary around the market, which is, I think, where you wanted to take the conversation, we've seen just a tremendous influx of growth capital and M&A activity in the space. So in 2020, I know you've got some materials.
Yeah, do you want me to share? So sure, I'll be sharing your slides happy to walk through them.
Yeah, well, let's make it conversational too. But, in 2020, we saw, if you go to the first page, we saw close to 300 growth capital investments into the PropTech space in 2020, significant amounts of money, $7.3 billion of equity and debt coming into just the US PropTech market alone, and an additional amount, incremental amount coming in internationally. And one of the themes, as you talked about, that we're seeing within those growth capital raises is the growth in the size of the raises. And so, whereas half a dozen years ago, there was a lot of Series A, a lot of seed stage investing, a lot of early stage businesses that were being funded by kind of true venture oriented rounds. Now we're starting to see multiple rounds north of 20, north of 50, some instances north of $100 million. And we saw 58 deals in 2020 north of $20 million. To us as advisors and participants in kind of the capital market side, what that means is these growth equity firms are making bigger bets. They're established leaders that are differentiating themselves, not just with scale, but with capital behind them. And sort of some of these larger firms are placing these bigger bets in the hope of driving real category leaders, because, as you said, we are starting to see the industry kind of grow up as a whole. And it's a sign of maturation for us in the market when you see these bigger rounds.
Agreed. I think what you're seeing is the cycle starting to complete itself and start again, in the sense of, before, like 6-10 years ago, you were taking bets on an industry where you didn't have a lot of complete success stories. But today, I'm looking at your page, and one of them touches me close on both sides, because Optimal Blue was a company that Seren invested in, and which I know the team there, and it got acquired eventually by Black Knight. And so the investment cycle into a company and out of a company like Optimal Blue that provides true value to the industry, and then having a strategic like Black Knight transform that that theoretical value into actual value by spreading it over its whole solution. Those kind of stories give a lot of momentum to new companies that can have really very real investment, because they have something to show up of what could happen, right?
That's right. I mean, that's right. And I mean, it's a very good point. I mean, the mortgage space in particular, with the Optimal Blue deal this year, with the Ellie Mae deal, is particularly active. You had Simple Nexus raise north of $100 million earlier this year. You had Blend complete a big capital raise already here in 2021. And so I think there's just a lot of activity in that mortgage ecosystem, as well as sort of a parallel path track to what we're seeing in the residential real estate space. Again, as we're looking at the convergence between the closing process and the transaction process on the residential side, with how that flows smoothly into the initiation of the mortgage application process and then the closing of the transaction. And so I think there's a lot of thematic investments that are being made around that kind of closing settlement process. Obviously, Qualia being another big name in that market that's raised capital over the past 12 months and has a tremendous amount of momentum around the story right now of what they're trying to deliver.
Yeah, and I think, and you were close in that one, in the real estate tech side, more that is directly with us, a company like Lone Wolf, having gone through its whole cycle with investment from Vista, and then becoming so efficient and such a service provider to the industry, and now finding a home with StonePoint, is just, those are the kind of success stories that we're all looking for, right?
Yeah, and I think the other element that plays into it, which is towards the lower part of this page, which is where the equity capital markets are right now from a pricing perspective. I mean, equity capital markets are up significantly, as everyone knows. And frankly, if you had told me in March 2020 that we'd be up 40+% in the Nasdaq in calendar year 2020, I would have told you there's no way that's the case. But with the amount of stimulus that's come into the market, with sort of the federal government stimulus, the interest rate environment that we're in, it's really, the opportunity cost of holding money on folks' balance sheet or holding money in cash is people have to deploy it. And so you're seeing the equity capital market pricing and the multiples that you're seeing, again, sort of complete the cycle, to your point, and foster continued investment at the earlier stage in innovative companies in the market that are going to go forward growth.
And I'd say, because I did go on camera in March of last year saying that I believe this was going to go this way, but the reason that I did was not, I honestly, and without getting too much of my politics in it, but stimulus packages and those kind of things are short-term solutions that might get you through a tight spot. But the truth is, in a world that has gotten very scary in the last year, always there's a flight to quality. And the country that has the most hardworking, entrepreneurial population in the world right now continues to be a place where money will always feel safer than anywhere else. Not because it's not risky here, but because when you look at the rest of the world, as a foreigner, I'd say like it just, that strength and unstoppable entrepreneurship of the US is just such an asset in a day like today.
Yeah, well, I mean, that's a really good point and an interesting perspective. And I should have been calling you in March of 2020 for my stock advice, I guess.
I said specifically about real estate, but I did say last year, I know the world, and I said it in March or April, I know the world seems like it's ending, but there's no stronger asset in the world right now than real assets within the US, and this industry will continue to thrive. And I think we're seeing there, of course, helped by government decisions, but I think the underlying strength of the industry is just unstoppable.
Yeah, well, I think the one more point on that prior page, if you don't mind, because I think it's important to what you mentioned around, I think, something like StonePoint and Lone Wolf is, because you're seeing these significant strategic exits, because you're seeing Thoma Bravo be able to sell Ellie Mae to ICE, and because you're seeing GTCR be able to be so successful with their investment in Optimal Blue, you're starting to see more and more of the large-scale private equity come into the market. Obviously, the recent news around that is the CoreLogic acquisition by StonePoint and Insight, or I guess I should say the announced acquisition, because there's some ongoing activity there.
Not through yet.
Yeah, and then the Thoma Bravo take private of RealPage, and then Lone Wolf going to StonePoint, as you talked about. All of these are going to be platform vehicles for continued M&A. I mean, the private equity playbook, as you know, is to buy into a platform asset and then continue to build around that asset, both organically through organic growth as well as through incremental add-on M&A activity. And so I think the fact that these private equity firms are becoming more active is a continued signal for us that we should expect more higher velocity M&A activity from those private equity backed strategics going forward.
Agreed.
So, I think that the key trend in residential that we're seeing, and you alluded to this with companies like Lone Wolf and companies like Blend, is the continued digitization of the transaction. So, as you think about this, one of the interesting things when you read sites like Inman and other news sources, there's always talk about the power dynamic between different constituents in the market, whether it's portals or software providers or MLSs or associations. One of the things that I always think about is who's really winning here, and it's the consumers. And the consumers are getting a better experience with a real estate agent, a better set of information and transparency about homes that they're potentially purchasing, better information about the closing process through the mortgage timeline and the time frame to close, tighter time frames to close, and just a better sort of mobilized digital experience as a result of all this money coming into the market. And so I think the industry, frankly, should be proud of itself for the innovation that's helping improve what, again, historically has been a pretty difficult, cumbersome, opaque process at the consumer level, because the consumers are really the winners here as a result of this digitization trend across the entire transaction.
I agree. And I would add, I'll move to the next page while I say this, but I would add that the consumer has won very significantly, and the professional agent has too. And the difference between 10 years ago, most startups were about, we'll do away with the agent and we'll take all that commission into tech, which I always felt was misguided and just wrong. And if you look at the big success stories of the last 5 years, most of them have been companies, and I proudly put myself and CINC in that bucket, that have worked to empower the agent and to allow a group of very well-prepared agents to serve more people more professionally. The rates of fraud and of just bungled up transactions have gone down, just because you have better agents being able to serve more clients. And that has, on both sides, with the increased value on the consumer side, increased value on the ability of professional agents to serve more clients, it just, as you say, create more value in general in the industry, which is what's getting realized in all of these transactions.
Yeah, and that's who, in my mind, should be winning, those professional agents. I was always amazed during our process conversations, when we had insight into some of your performance metrics, that you had teams on the platform doing hundreds and hundreds of transactions per year. Yes. And you think about the ability to do hundreds and hundreds of transactions per year. The only way you can do that is with enablement tools that enable you to interact with your consumers better, enable you to provide better quality service to your clients and customers, and enable you to coordinate your activities across your team more efficiently. And so I think the agents, brokers, teams who have embraced the technology revolution, absolutely, those are winners for sure here. And they will continue to be winners, as so long as they work in partnership with the technology organizations such as yourself and others who are delivering those to empower them. And that's going to be the real set of winners here, in addition to the consumer.
Fully agree.
So, I mean, you see this chart. I mean, this chart shows continued momentum in investment into the PropTech market. Again, 7.3 billion in equity and debt, just on the growth capital side. I mean, this is just growth capital coming into private businesses to help them continue to grow and expand. Slightly down year over year, but year over year, yet we had a couple of big investment rounds in companies like Open Door in 2019. And so I wouldn't read into it all the fact that it's down year over year as a reflection of any sort of activity in the market. This is a tremendous growth. Certainly, if you look back over the last 5 or 6 years, we're talking multiples higher of invested capital into the space. And then I think the other theme too, and you're familiar with this, Alvaro, you have some very specialized vertical investors who've come into this space to be able to add differentiation. And frankly, one of the points of differentiation for GCA is we sort of speak the language of the real estate community. And I think there's a set of PropTech oriented investors, whether it's Fifth Wall or Camber Creek or Real Estate Technology Ventures or others, even CINC Capital, your prior firm, who've had a lot of success investing into this category. Got to give Sharon a shout out. Yeah. Who've had a lot of success in the category, but who've sort of won and been able to differentiate themselves by having a unique angle in the market. Especially, I think, on the multifamily and commercial side, you're starting to see more strategic, kind of crossover strategics also form funds. JLL has a fund. Starwood Capital is focused on putting money to work in the space. Brookfield has a fund who they've been very active with. And so I think these specialized funds that have quasi-strategic angles with distribution plays on the multifamily side is another trend we're seeing a lot of in the market.
So I think to everyone here, I think what Chris is saying is the world of just pure financial private equity, just dropping in with money, is losing through time versus involved advisors that provide know-how and that provide experience to these companies. That CERN is a perfect example of a company that doesn't come and control what you do, but that comes and adds to you, and that really makes a difference. But it's happy that the difference between 19 and 17 is $1 billion, I think, on the equity side. I'd say that's all SoftBank. That didn't go crazy in 2020 like they did in 2019.
We stripped out the WeWork investments here because it just would have made that line a little too crazy in 2019. Again, this page gets back to that trend we talked about of kind of growing size of rounds in terms of just the institutionalization, the maturation of the industry. Again, you look back to 2015, you had 15 rounds north of $20 million into the PropTech market, close to 60 today. Just substantial expansion of the number of larger scale companies going after different subcategories. Again, this is across all the different sub-verticals: construction, multifamily, residential. But nevertheless, the trend up and to the right here in terms of size of capital check into the space has been tremendous.
Yeah, I want to get to, let me see, well, still a slide away. So
all right, well, this slide's really interesting because I think this speaks to one of the things, Alvaro, you and I had sort of chatted about previously, is just what kind of capital market activity looks like, especially for some of these larger companies looking at exits. And so if you look at this page, we've got 150 plus companies here who've raised north of $25 million in the market. Again, just private companies. This doesn't include the lone wolves of the world who were purchased via majority acquisition. This is just the growth equity capital into some of these names. And again, across all these different segments, when you look at the top part of the chart, folks who've raised north of $200 million, frankly, if you'd asked me 18, 24 months ago, who some of the buyers were for these businesses who'd raised a substantial amount of capital, I wasn't quite sure. Some of the larger firms in particular, your parent organization, Fidelity, they're very focused on profitability. Some of the other organizations, especially the mortgage folks in the space, are very focused on profitability. And a lot of these companies tend to be a little bit growthier. They're chasing really big total addressable markets. They're going after new categories in some instances that they've created kind of wholesale off the back of their business plan and activities. And there wasn't necessarily as natural a fit for them, in my view, amongst some of the strategic acquirers. But now that the equity capital markets have started to open up, the IPO windows available, you've seen companies like Lemonade and Airbnb go public via traditional IPOs, and then SPACs and the growth of SPACs, which are special purpose acquisition companies who've raised blind pools of capital to go out and find companies to merge with, to take public. And you've obviously seen Matterport and Latch take advantage of SPAC partnership deals over the course of the past few months. I do think there's an increasing window and opportunity for larger businesses to join forces with a SPAC, be public. There's a number of SPACs that are focused on the PropTech market who are actively pursuing combo opportunities in this space specifically because of the investor appetite that exists to capture some of the excitement and momentum in the space right now.
And so, Chris, give me the 1 minute of how is it different to deal if you're in tech or you're a brokerage and you're thinking about investment, how is it different dealing with a SPAC than it is with a traditional private equity?
Yeah, I mean, so SPAC, the ultimate outcome of a SPAC transaction is you will be a public company. And so anybody who's considering partnering with a SPAC, the first thing I would say to them is ultimately post transaction, you need to be able to stand alone as a public company in the market. Whereas a traditional private equity transaction being purchased by a private equity firm, you remain private. You're not managing necessarily to quarterly goals that you have to communicate to Wall Street. All of your activities are kind of held in the inner circle of the private equity firm and the management team that's executing against your business plan. Whereas again, contrast that to a SPAC and you are a publicly listed traded company subject to SEC regulations and communication protocol that just puts you in a different camp. And so some companies are ready to go do that and ready to be public companies, and the growth curve that they're on, allows them to do that and really project some very strong go forward growth that the market can get excited about. Other companies, whether it's because they're not growing as quickly or they have some internal operational elements they want to fine tune before they go public, they prefer to go the private equity route.
So this is an awesome slide. And so we're seeing here just the performance of the different categories of stock. And one of the things that really jumps up to me is, forget about tech. What about the brokerages like Redfin, EXP, Remax, like Rheology, who is the most traditional of brokerages? They're all doing great. So what's your thought there?
Yeah, well, I mean, I think that for somebody like EXP, they've just had a tremendous explosion in their agent growth and revenue growth over the last few years. I mean, you talk about what the market's rewarding right now in this environment is growth. And EXP has been delivering against that tremendously over the past 3 or 4 years. If you just look at their top line performance and their ability to recruit and add agents to the platform. If you think about somebody like Redfin, I mean, also tremendously successful. I think Redfin's success is due to a couple different factors. One, I think they're doing a really good job integrating some of the ancillary products around mortgage and title and sort of the attach rates around the monetization of their transactions, because they're sort of holding those transactions captive, so to speak, inside of the Redfin umbrella and able to offer the consumer options to continue to monetize with them for these incremental products associated with the real estate transaction purchase. And I think that's been driving a lot of their growth. And I think also they just have a great customer experience and consumer brand out there right now. I mean, I think as the notion of what they're delivering to the market has become more broadly known at the consumer level, and they've expanded into new geographies and consumers are appreciative of the product they're delivering to the space, I think they've got a lot of momentum, both behind the product itself and behind the brand.
But those, Chris, are company-specific things, and we may agree or disagree on some of them. But on as a group, brokerages, residential brokerage was not a hot investment commodity 3 years ago, while it had an amazing performance in the last year. Is this just representative of the general belief in the industry, and so thinking, well, brokerages are going to continue to grow with it?
Well, so I think that number one, there's been a lot of, obviously 2020 was a big year of transactions itself in the real estate industry. There were a lot of transactions that took place in 2020 in the residential space, and existing home sales were very active, just given all the movement activity around COVID. My thought around sort of the brokerage momentum as a group is, again, sort of back oriented towards this theme of consolidation of some of the and centralization of some of the activities in the space. You talked about some of your teams doing hundreds of transactions per year with technology-enabled tools. And I think that we're seeing that same type of dynamic at the brokerage level, just at larger scale. Technology-enabled brokerages are, in my view, being able to competitively differentiate themselves relative to smaller non-tech enabled brokerages. And you're seeing the stock price momentum that they've achieved as a reflection of that.
Interesting. Yeah, I must say that it really, that's one of the things that really surprised me as I was thinking about this, because again, you have Redfin as a true tech-oriented brokerage versus Reology, which is not. And but overall, I just see, I think what this tells me at least is the world believes today that real estate in the US will continue to be strong. So anyone that is taking a leading position in serving that market has strong tailwinds on their side.
I think that's right. I think that's right.
And so, and I know we're terribly over our time, but I think my two final questions. One is, what do you think is the overarching strategy of like some of these big players that are coming in, like CoStar and StonePoint and SoftBank? How do you see their overarching investment strategy in the industry playing out?
Yeah, I mean, obviously those are all sort of different businesses with different approaches to the market. But if you think about somebody like a Lone Wolf, for example, I mean, that's a core technology enablement tool for the brokerage, agent teams, MLS association ecosystem. And so, they've always been very MLS association broker centric, and I see them continuing to provide the types of tools that you would imagine them wanting to provide to the industry to put power in the hands of those brokers and agents and teams to drive that transaction velocity that we talked about. In terms of just efficiency and productivity and transaction volume, et cetera. For somebody like a CoStar, obviously they're making a bunch of noise in the market right now, and
I'd say that
really for them, the real estate space on the residential side, they've been such a significant provider of solutions into the commercial space that, in my view, it was only a matter of time before they decided to move into the residential market and start to expand their TAM opportunity in residential. I mean, they seem to be taking a very sort of thematically consistent view of what I talked about with Lone Wolf, which is trying to provide solutions to the broker teams, agent community that enable those brokers to be successful and continue to provide data products to the industry to enable transaction success and interaction with consumers in a complementary manner.
And so that leads me to my last question, which is, what do you see could stem this tide, right? Is it interest rates changing? Is it the economy getting colder? What turns this into a different direction from where it is today?
It's a really good question, and I wish I had your crystal ball. Sounds like you might be better at answering that question than I would be, based on your prediction in March of 2020. But I think if you sort of take a step back and say sort of macro where we are, I don't think anything. Yes, higher interest rates might slow down transaction activity in the market, or might put a damper on prices at the individual home level, or tighten up, lenders' ability to go out and extend credit to various different individuals. But I think from a macro perspective, even if there's a sort of a small hiccup in the overall macroeconomic environment, the trend towards adoption of technology in this space will continue to persist. And I think you saw that a little bit with what happened during the COVID slowdown last March and April, where even though the housing market had been put on pause, there was still a lot of interest and activity around some of those digitization tools, the Notarizes of the world, the Qualias of the world, who were driving digitization across the spectrum of the transaction, because that's the long-term trend. Virtual showings was another big, component of what sort of exploded during the COVID era when people couldn't access properties. And so, I think over the long term, even if there is a slowdown at some point here, we're going to see continued momentum in this market. This market's here to stay. It's not a flash in the pan. The value of residential, commercial, multifamily real estate is too big for the market to just ignore or sort of turn off to. So I'm very bullish on the long-term future here.
Awesome. I think this has been extremely enlightening. I personally appreciate your insights, and I know that we'll keep hearing your name as things keep evolving in the next year or two. So Chris, thank you so much for joining us and for sharing all of this with us. And I hope we talk again soon.
Great. Thank you, Alvaro. Thank you, Edmund. Appreciate the opportunity. Great to chat with you as always, Alvaro.
And to all viewers here, thank you for joining us, and we'll talk again soon, and I hope we got something valuable out of this. So thank you very much.